Okay, good morning. Just a small look at the DXY. Now we see we have this double or triple top. Either we look at it on a 4-hour or a 1 hour or 15-minute chart. It's really very well defined and sorry, and right on our level. So I really like that one, and it could even be more than I expect as a pullback. Let's look now at the roadmap chart. So that's what we have been looking at. We stopped right to the peak on the level we have been calling for the last weeks or days. I don't remember, 93.041, so could not be more precise. If we look at that on a 4-hour chart, it's even better. I mean, you have this double top, perfect double top, and then we should look lower as we expect. I still think, as we discussed in the morning video yesterday, I still look for a further continuation up to this 1-to-1 at 93.98, and the ideal target would be 94.47, which is the 38 fib of this 236, 214 fib we have here. So just to refresh, we closed above it for the first time and above the 50% for the first time, above the 23.6 fib for the first time, sorry, on Friday. That's a very important thing. I still hope we will respect this fib, at least ideally this 50% ABC on the weekly close. So we could look lower inside week, intra-week, and then bounce back above those level for the weekly close. That would be the ideal scenario, and that would still keep open the continuation we are looking at. I am taking a lot of longs now, more than shorts, because longs Euro USD, so short USD more than long USD, because now the risk reward is really on that side. We should probably finish the upside in this area, perhaps push a little bit in August because of the thin market, so we could push a little bit higher, but that's, I think that could be really the end of this move. Then we would go lower, and we would go much higher on Euro USD, as we know. So Euro USD is the 117, 116 area we are looking at, and on DXY it's really much lower, like the 88 or 86, or even much lower, up to 80 some extension. But we need to wait that this move is done. When that move here will be done, and if it's done, because we must always stay open-minded, we have here a kind of double bottom, we bounce from there, so we could go up to the 50%, which would be a good support resistance area, and we would have some fib extension there. But then if we measure this move, and if we consider that move as a big, perhaps a big monthly ABC, like this one, look, it's really nice one. So if we consider this move here, that would be the move we would have as soon as we would respect the idea of what we are looking at. So then we would have this as an ABC. Let's imagine we go to the 38%, 32 fib. We are not there yet. We are under it. Of course, we are here, but we would go there. So look, where is the extension? The 1-to-1 extension is at 80.78. And it's funny always, whatever you do, things are not random. And then we would be potentially in that area of support and resistances we have there. So that could be really interesting development. In that case, we would need to break, and the first big stop would be in the 86.03, and randomly, of course, it's support area. So we have this support area in that zone. Let me look at it on regular candles. So probably that one here would be really perfect. You see, boom. Same here, a big consolidation here. We have some nice weekly order blocks, so we can already note that if you have time, and we have time today, it's a little bit slowish. So if we look at this and we mark the order blocks, we could stop. Of course, we would start to stop in this area. But that's, let's say, for Christmas. I don't know. I don't know when that would be. But this is what we would look for if this consolidation here is stopped somewhere around the 38 fib. If we go to the 50%, then we would just move up this thing and we would have the 61.8 there and the 1-to-1 here, which is still in an area that we would find a lot of resistances and things like that. So that's more or less the idea. We had this move down, which is nice impulsive move. We look with Hikinachi candle, it's a nice impulsive move down. Then we would come back. We have those trend line that could make a confluence here and stop it with all the fibs and tools that we are already using. This trend line is really important. You see how strong it can be. We broke through. So potentially, unless it was a phase break, but if it was a phase break, it's really a long breakout. It's like 1 year or something like that. We broke it in December 2020. So let's say in November 2020, and it's already nearly not 1 year, but it's many months, several months that we have been broken this area. So we will come back, test this thing, and I think that will be all perhaps a little push, a little bit spiky on the holidays, but then we should resume lower. Now, if we look again at this chart, so we see we have been bouncing now on the green support we have here. That's normal. We have some resistances, as I said already this morning. Just a few minutes ago, I think I said that. So we have resistances here as we had on the euro dollar. So that's normal. The battle is on. And this double top should hold more to give us the long entries we are looking for on the USD. Concerning euro, well, it's the same thing. We have this intraday view. We had here a green support resistance, so a green level. It's easier to say that is much faster. We bounce here, as we said. We touched this level of the last week lows. We went for some stops. So that's suggesting some continuation here. That's why we took some weak stops there, and we didn't took them today. So that's why I think we can see some follow through. And because of the period market, we'll try to trap people. So everybody is trying to get short Euro USD, meaning long USD, and they will trap them before really resuming lower and breaking those this low. If we look at it on this way, you see it's a little bit lower each time. I mean, we are not really breaking hard lower. And the reason why we are not breaking hard lower is because we have this big M, let me look here. Well, we can see it here, but we have this big M shape that we have been posted since last, I think it was, I posted that in May. So it's this M shape we have here. But now we are really entering in this area in a very strong area of support and resistances. So all this one and that one here, and you saw we just stop on some order blocks we have there. If we look at that, this is a daily order block, a very nice daily order block here. If you look, we can put a line on it and see what we get. Let's go. So see how nicely that has been working. The bottom of this order block, which is, by the way, the 78.6 of this fib down, is just there, so it has been holding too. But we have some support and resistances here, and we have tons of support and resistances in this area. So if we look at it on a weekly base, you see how strong is that to be broken. And I think we should not break through it. We can go to the 160, to the 116 something. We have a fib there. Probably we can finish a little bit before. We can perhaps just look at this 38.2 fib. So that's why now I'm trying to be harder long than short, because we have a much bigger move up. If I remember well from the memory, it's about 128. That was the target of this move, of the complete move we have here, considering an ABC, and we were targeting 128. So it's already 1,000 pips up, and down we should see only 150 pips or something like that.